What would you say is the most common mistake business owners make with tax?
I would say the most common mistake is people don't plan ahead, which comes in again to pre-year end and planning what we're spending to help save tax, but also not physically saving any cash to pay any tax bills that may arise.
Yeah, absolutely. I mean, the amount of times I sit in a meeting and people have one bank account and I'm like, split them out into pots. Talking in the past about, a car mechanic invoices for £240. Well, first of all, 40 of that is straight off to the VAT man. 38 of that is straight off onto corporation tax, depending on where they are in their profit levels. Whereas actually they might just go, there's £240 for me.
Yes. And then they don't think about it until maybe the accountant gives them the tax bill, and then they have to find it and...
Absolutely. That's obviously for a limited company. What about for sole trader? What tax mistakes can they make?
I would say a similar thing, especially if people aren't aware of payments on account as well. If their tax bill goes over £1,000, they have to make payments towards the next tax year. So that may impact their cash flow, and they're not aware of that. With sole traders and limited companies, you may find where people will use their personal bank accounts or personal credit cards to use for business expenditure, which means it's easily missed. You may miss expenses, but also it's harder to keep track of spending and things. It's a lot easier to have separate bank accounts, separate credit cards to be able to keep track of that.
Yeah, absolutely. Very good sort of cleanliness to keep them separate. Obviously, another common mistake that people do is not tax planning. So whether that's they then haven't got the cash to pay at the time. What are the pitfalls if people haven't got the money to pay their tax, if they haven't saved it throughout the year?
If you're making late payments, HMRC will add interest onto the tax liabilities, so that's another expense you need to find, and also penalties as well. They may fine you for late payment. So VAT late payments, so many times if you're late with a payment, they'll charge you penalties, which again just adds to these extra liabilities that you might not necessarily have the funds for, or you don't need.
How do we help our clients then? Obviously, we want to help our clients proactively with that sort of thing. So, we don't want them having fines, we don't have an interest in that sort of thing. So where are we helping in that region?
So we send emails out confirming amounts, reference numbers, bank details for them to be able to make payment, which is the easiest way, really, bank transfer, using online banking. So we send that information across so it's readily available for our clients. They don't have to go looking for it.
Great. Now, one massive common mistake that I see when I'm having meetings with clients and would normally call someone like yourself in to deal with is those clients who believe the business bank account is their own personal bank account. And we've got the holidays to the Maldives, we've got the brand new Range Rover in there, we've got the school fees in there, and it comes to year end and suddenly we tell them that they've got an overdrawn director's loan account. So Lucy, just for clarification, can you just explain what a DLA is, please?
So a director's loan account is effectively a current account sitting within the accounts, which any money to and from the business from the directors will sit, because it's likely that at some point the director may have to introduce funds into the business to keep it running, and again may need to take some cash out of the business to maybe borrow or whatever. So this current account is the balance of all of those inflows and outflows. At points it may become, as you mentioned, overdrawn. We need to clear that with dividends, but there needs to be the profits available within the company to issue those dividends, and that's where some people may not monitor that, may not understand, and that's when we get into the overdrawn positions, which ultimately then may lead on to additional taxes.
And actually, again, that is when we need to look at their personal finances to make sure that the business is capable of sustaining their personal lifestyle, their personal wants. And again, that's kind of where we head into, as we would call the advisory space, which is making sure that we are building a business that supports their lifestyle. I always say we work to live, we don't live to work.